We've got some debt or leverage ratios. Here we go. Make sure you know these as well. A couple that I want to bring your attention to and highlight specifically: total debt ratio and the debt to equity ratio, the times interest earned ratio. So this is just, these are solvency ratios. Can you pay your bills? And then times interest earned, earnings before interest expense and taxes divided by interest expense. So just let's think of this just earnings, right? What are you bringing in divided by interest expense? You want this to be higher because, think about it, your earnings are good and interest expense is bad. You don't want to pay interest expense. And what this is telling you is how much money you're making based on how much interest you're paying. Let's say you're making a lot of money and not paying a lot of interest. That's great. Let's say you're making a lot of money but also paying a lot of interest. Well, maybe it makes sense, right? And that would just mean you're more leveraged, you're more levered, you are using more leverage, you're taking out more debt, paying more interest because of that, and maybe that money is being well used to help finance your earnings. Obviously, you don't want higher interest expense. You want this number to be as high as possible. Let's dive into another example. The value of a levered firm. We saw that previously. Well, what is the value of a levered firm? And what is a levered firm? That is a company or an entity that has leverage. Now, what is that value of the company? It is the value of an unlevered firm, meaning the value of a company that has no debt, plus the present value of the interest tax savings. What does this mean? When you take out debt, that debt has interest. That interest is tax deductible. And we are going to take that into account as value, that we can add value to our levered firm. Now, in year one, stock company had no debt, hence the name stock company. Look at that. Isn't that great? However, had a total capital structure of $500 million. That means it's 100% equity. They finance their company. They have equity of $500 million. In year two, the company issued $100 million of debt at an 8% interest rate. Stock company has a corporate tax rate of 25%. So what would the value of this levered firm be? Here we go. We've got, well, it's the value of an unlevered firm. So they were unlevered. They had zero debt in the previous year. Their value was $500 million. And then we're going to also add in the present value of the interest tax savings. Now, first off, what's our interest? Well, $100 million of debt times 8% tax rate. And then why are we multiplying that by 0.25? Well, that's our tax rate. So we are saying that 25% of the interest spent is going to be a tax saving. And then we're going to divide that by the 8%, get that actual savings there. And that's going to give us 25 million. Add the 25 million to the 500 million, gives us the value of this levered firm, which is $525 million. Now, we can see this here, as I mentioned, companies that use debt to finance themselves benefit from interest payments being tax deductible. These tax savings create the difference in value between a levered and an unlevered firm. As we see, the value of the unlevered firm was 500, now we're 525, and that difference comes from the present value of the interest tax savings. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.